Welcome to today's stock market news update. Let's dive right into the key stories shaping the markets. Starting with some important US economic indicators, the United States Bureau of Labor Statistics will release its preliminary benchmark revisions to net payroll growth today at 10 a.m. Eastern Time. The BLS annual benchmark revision will update job numbers for the period from April 2024 through March 2025. Last year's revisions removed 818,000 jobs from the count. Goldman Sachs predicts that this time between 550,000 and 950,000 jobs could be erased. This kind of adjustment might influence how the Federal Reserve thinks about interest rate changes. Shifting to consumer spending trends, credit card use has been increasing at a slower pace than debit card use since late last year, marking the first such period in almost 4 years, according to the Wall Street Journal. This shift could signal changes in how people are handling their money, which might affect broader economic views. In manufacturing news, US factory activity has shrunk for 6 months in a row, as reported by Reuters. Ongoing contraction like this could play a role in market expectations for economic growth. On the job front, people's belief in their ability to find a new job has dropped to its lowest point ever, according to the New York Federal Reserve. Also related to jobs, workers who change positions usually see their pay rise faster than those who stay put. But that pattern has flipped for the past 6 months, starting in February, according to CNBC. It's the first reversal since the Great Recession, and this could raise questions about wage trends in the economy. On a positive note, a survey on job stability showed 66% of workers say they feel somewhat or very sure about keeping their current role, according to Redfin. This level of assurance might reflect broader feelings in the workforce that could influence market sentiment. Turning to consumer debt, the rate of late payments on car loans has climbed to its highest point in 14 years. Rising delinquencies could point to financial stress among households, potentially affecting credit markets. Now let's look at the United States housing sector. New home supply has reached its highest level since right before the housing market downturn that sparked the Great Recession, according to Fortune. High inventory like this might shape how buyers and sellers approach the real estate market. Breaking it down by region, there are now a record 312,000 new homes available in the southern United States, which is 21,000 more than the peak in August 2006, just before the housing crash. During the 2020 pandemic, the number in the South was about half of today's figure. In the West, new homes for sale have gone up by 40,000 over the last 5 years, reaching 111,000, close to the highest since 2008. Inventory in the Northeast and Midwest is also near recent highs, though still well under the 2006 bubble levels. These regional differences could highlight varying pressures in the housing market. Moving to financial market updates, the United States 10-year Treasury yield dipped below 4.05%, its lowest in over 5 months. Yield movements like this can signal shifts in bond markets and investor expectations for interest rates. On the topic of long-term fiscal health, United States federal debt is projected to hit $150 trillion by 2055, according to the Congressional Budget Office's own forecast. That would mean about $1.6 million of debt per American household, compared to today's roughly $274,000. It would also lift the debt to GDP ratio to a record 169%, from the current 123%. For context, that ratio has averaged around 69% over the past 50 years. Projections like these might affect how markets think about future government spending and borrowing. In policy news tied to trade, Treasury Secretary Scott Bessent said on Sunday that he feels sure President Donald Trump's tariff plan will succeed at the Supreme Court, but warned that his department would need to issue huge refunds if the court rules against it. The Trump administration recently asked the Supreme Court for a quick ruling to reverse an appeals court, finding that most tariffs on imports from other countries are not legal. The Supreme Court might take until early next summer to decide. Bessent mentioned that waiting until June 2026 could mean $750 billion to to $1 trillion in tariffs already collected, and undoing them might cause major issues. The idea of refunding that much could lead to a huge payout for the businesses and groups that paid them, according to CNBC. Shifting to international tourism impacts on the United States. The country could lose around $30 billion in foreign visitor spending this year, as its political situation and strong dollar keep travelers away. Early in 2025, the United States Travel Association expected foreign travel dollars to reach $200.8 billion this year. But seeing a big drop in arrivals, the World Travel and Tourism Council in May forecasted it would fall to $169 billion. In the first half of 2025, the United States saw about 1 million fewer international visitors than the same time in 2024, based on government data, according to CNBC. Now on to commodities, starting with precious metals. Gold hit a new all-time high above $3,690 as investors seek protection from inflation worries. Gold has risen in 8 out of the last 9 trading days. It has now broken past its 45-year high when adjusted for inflation. Silver has climbed to its highest price in 14 years, topping $42. Moves in metals like these could reflect broader concerns about economic stability. In oil news, OPEC Plus has decided to increase oil output further starting in October, as its leader, Saudi Arabia, aims to capture more market share. OPEC Plus has been raising production since April after years of reductions to support prices. 8 OPEC Plus members agreed on Sunday in an online meeting to add 137,000 barrels per day from October, much less than the roughly 555,000 added for September and August, and 411,000 added in July and June. OPEC Plus said it can speed up, stop, or reverse increases at later meetings and set the next one for the 8 countries on October 5th, according to CNBC. Turning to company and tech developments, OpenAI is creating an AI job site that might compete with Microsoft's LinkedIn, according to CNBC. New platforms like this could change how people search for work and affect related stocks. In IPO news, StubHub plans to raise up to $9.2 billion in its public offering, with shares priced between $22 and $25 each, according to CNBC. Listings of this size might draw attention from investors looking at entertainment and ticketing sectors. In trade news from Asia, China's exports to the United States dropped 33% year-over-year in August, one of the biggest falls lately. Imports from the United States also declined 16% year-over-year due to trade tensions, based on Chinese customs data. Meanwhile, shipments to the European Union, ASEAN, and Africa rose 10.4%, 22.5%, and 26% year-over-year. Even with shifting focus, the United States is still China's top single-country buyer, taking $283 billion in goods so far this year, versus $541 billion to the European Union as a group. Trade shifts like these could impact global supply chains and economic relations. Staying in Asia, Japan's Nikkei 225 index briefly passed 44,000 to set new all-time highs. Finally, in tech innovation from China, as the push for home robots grows, Chinese humanoid startup X Square Robot announced on Monday it raised about $100 million in a funding round led by Alibaba Cloud. Chief Operating Officer Yang Qian told CNBC the deal brings total funding to around 2 billion yuan, or $280 million. Yang said robots now need to handle complex tasks on their own, and after years of building machines for simple jobs like picking up items, the field sees AI as key to growing abilities. That's all for today's update. Stay tuned for more updates and don't forget to subscribe.